profit. Not the best profit margin, but it may not necessarily be hugely disappointing to an investor. Does that make sense?
Yeah.
But do you see the need to create a gap between what they want for it and what the comps go for? Because there's so many dynamics, or there's so many steps that this property will go through in order to get to this final result, which is the last investor extracting the last amount of profit from it before the permanent homeowner begins to grow and allow the equity in the property to grow. And so you really want to find things that kind of give you more room to play, because those properties will be more attractive to investors. This limits an investor in their ability to really build a property, do what they want to do with it, and ultimately really make a good profit from it. Okay? Does that make sense?
Yes.
Do we have another property? Does anyone else have a property? Alicia, you want to go?
Okay. Mine's like similar to hers, but it's a 3-bedroom, 1-bath Rambler. It's a foreclosure, and it's in the Capitol Heights area.
Okay. How much is it?
It's going for $89,900.
89. Okay.
The area that has the value is growing, and I was looking at the school rating, but based on the conversation earlier, somehow don't really focus on the school so far, because we're going to sell it. So
Yep.
I would.
What are the comps?
The comps is about 154,000.
154.
Yeah.
Okay.
So 154. So I'm going to sell it to the 40% value. I got the 61,600.
So you need the bank to sell it to you for 61,000, less than that. 61,600.
Right.
Okay. So that's what you need to get the property at.
And I used the 55% when I did the calculation.
Okay.
And I got the 84,700.
So the investor needs to get it from you for no less than 84,700. Okay. So that basically means that if you buy it for 60,000 and you sell it for 85,000, then you've made a $25,000 profit. Let's just say 60. You sell it for 85. Your wholesale profit is 25,000, right? So then the investor comes back in. The investor comes in. He's bought it for 85. He adds 30 to it just to get it fixed up. We're now at 125. Is that 125? No, 115. We're at 115. And the average comps are going for 154. See how tight that is? So let's say he puts it on the market for 150, and he's only able to realize a $35,000 profit from it. So doable, but just less attractive than other properties. Because people, when I'm talking 90 days before I pull money out, then I want my 90 days to be worth the mental agony to hold on to a property for 90 days. And $35,000 just is not a lot of money. When you're thinking about the fact that unless this developer just has a lot of volume and they're doing multiple properties. But typically, especially when you're dealing with inside, now, here's the difference. Your property was located where?
Greenwood.
Right. Her property was located where? Charles County.
Charles County. That's far out.
Right? Your property was located where, Ayana? In the city? City of Baltimore. And your property was located? Capitol Heights. See the difference between the suburbs and the city? The profit margin is just always more attractive where it's more of a metropolitan community, because it's more of an attraction. There's more happening. And there's so many other things that contribute to this number. When you're looking at, we just went through a quick analysis of the profit margins, because we identified, Kiana, that with her property, the profit that the developer is going to make at the end is only $35,000, and we talked about the fact that that may not be as attractive as it would be to, to hold on to a property and to rehab it for 90 days and to only pull $35,000 out of it as a profit. That's not necessarily an ideal profit when you have the Deanwood property and the Baltimore City property offering $100,000 profit margin, right? And so we were comparing the differences between finding properties in a metropolitan area versus finding properties that are in suburb areas that are considered suburbs. And so your property was Charles County, her property is Prince George's County, but then we had the Deanwood and the Baltimore property, and we saw the difference in the profit margin. And so I wanted to say what I was going to go into, not very transient. Okay? So, got another property? Would you guys agree that do you think this is a good property for Alicia, or should she continue to look?
I want to keep looking.
Okay. All right.
Well, the other one is still in the Capitol Heights area.
What are the numbers?
It was 79,900.
Okay.
And then the comps had 3. So it's about the same, like the 156.
So 79,500. You said 900, and you said that the comps are the same at 156.
I had pulled 3. It was like 85, 171, and 156. So it was.
So let's just. So the 89 one is probably the one from the other page, and that also you said is 171 and 156. So let's just say 165,000.
Okay.
So 75,900.
It was 79,900.
900.
It was a 3.
Comps are 165. 40% loan to value. $66. So that's what you have to spend to get it. And then what's 55% loan to value? 90. So that's what you're able to sell it at. Okay. So you get the property for, let's just say, $65,000, right? That's your potential wholesale fee. The real estate investor gets the property for $90. They put $30 into it. They get it up to $120 after rehab costs. They sell it for $165. They make a $45,000 profit. That doesn't include the expenses that they have to pay for real estate fees and whatever other expenses that they have. See what I'm saying? When you look at properties that are priced at like 70, 80,000, you want to be in communities that are appraising for like 200, 210,000. This 165 is just too low, right? Because you just want to give them more room, because by the time they pay their expenses, that's a wholesale deal.
Right.
It's a lot of work for you basically made as much money as they've made, but they've held on to it for 90 days. So I want everyone to take out, look through your properties. If you don't have a computer, that's fine. I have an extra one though if anyone wants to use one. However, I want you to look through the properties that you pulled, and I want you to identify, based on the activities that we just did, where your top 3 are. And then begin to work out the exit strategies on this form so that we can go over them before leaving, okay? So let's take the next 30 minutes and do that. I'm going to have a seat if everyone is in agreement with that.
Yeah, sure.
And